there's going to be some movement around insolvencies in particular. There's the concern that a lot of businesses that would have been going out of business in this time, regardless of the coronavirus pandemic, are holding on because of government subsidies.
Yeah, that's right, Annalise. There's been a dearth of administrations and receiverships solely because of these extension of insolvent trading rules. And now what we're hearing is the Treasurer is going to probably extend that even beyond the September deadline. So this whole September cliff people are talking about, when deferrals, interest rate deferrals are meant to come in, that's now been extended by the banks for 4 months, and now you're going to see these insolvency relief. That's also going to be extended another couple of months as well, potentially. So it can be interpreted as two ways: one, kicking the can down the road, or actually trying to provide as much support as possible to help business deal with this crisis.
Because that is the big issue, is if these businesses should have been going bankrupt in the meantime, but we're also looking at a very different world post-pandemic than we went into before. How significant is this that we do have these eased restrictions for insolvency practitioners about taking companies into insolvencies? We seem to have the most generous provisions compared to anywhere in the world right now.
Yeah, when you talk to all the insolvency experts, there's actually some division between what they think. Some will say you can't keep unviable zombie companies to continue operating. You can't hold back payments that are due to creditors. And you can't basically keep on asking the banks to extend your finance if you know your business is not going to be viable over the next 6 to 12, 18 months. But then on the other hand, you have this situation where you have people saying, well, look, if you actually reduce sort of the impost on business, whether it be interest payments or whether it be the thresholds for which people can start bankruptcy proceedings against your company, then that might actually allow you to sneak through this unprecedented time. I mean, it's not like you're just going through a recession. This is a recession plus restriction on consumption with people being locked down and so forth. So unprecedented time, maybe unprecedented measures, but in the end of the day, you've got this division. Do you keep zombie companies alive? Do you keep companies that aren't going to survive alive? Or do you try and work your way through it and keep them going? And it's becoming very frustrating for the economists, because they're constantly trying to work out, well, what do you do? But at the moment, they can't do anything because it's a health problem. It's all about controlling the health side of the situation before you can even start to work out how to go about fixing the economy.
And it is just so unpredictable at the moment as well. But what do you make, just quickly to round off the interview, about the ideas that the government's going to be bringing forward, those income tax cuts? It seems counterproductive to be having tax cuts that would impact revenue, but they might be wanting to boost that consumer confidence more than anything.
Well, indeed. I mean, even if you reduce tax cuts, I mean, you can argue that maybe some people with the extra money in their pocket won't be able to spend it like they used to as well. So there's a little bit of a contradiction in that. But I think the important point in potentially bringing forward that second stage tax cuts is that this starts to build a case for broader tax reform, because when you come to the crossbench approving such a thing, they're going to want to see broader tax changes as opposed to just lifting the threshold for the tax rates. So it's actually not just about the consumption, it's about a broader tax fix. And I think that's where people need to focus the attention if indeed the government does bring those second stage tax cuts at the budget in October.